Now in this video, what we're going to talk about is over 100,000 layoffs that have occurred in 2025, right? And how you can prepare now or get left behind. I think it's important to understand what are the trends of the layoffs so you can find out where the job losses are being had, even though it is kind of broad, and where you can maybe look and find a niche that works for you in your career, in your industry, so you don't end up just another employee who's laid off and simply can't find a job. Let's go through this in a bit of detail. So where exactly have been the biggest layoffs? The first place we want to talk about in terms of big layoffs, overall, there have been about 130,000 to 180,000 layoffs over 2025. I put these statistics together through doing some research. And what ended up happening is these layoffs were in 2025, mainly in America. I've got the data from America mainly. And there's more layoffs planned for 2026 and 2027 for both permanent employees and contractors. It's across a broad range of companies, everything from Nike to Microsoft. Companies are tightening their budgets, reshaping their teams for the AI era. And from 2023 to 2025, we saw a major layoff phase across tech, across finance, many other different niches, and it's still accelerating into 2026. Then we've got some future predictions, right? What are some of the future predictions? We have the Economic Forum of the world that is saying that 41% of companies will reduce their employees over the next 5 years. 41% of companies will reduce their employees over the next 5 years. Now, I know sometimes the data is exaggerated, but when we look at the trends and the way things are heading, it makes sense that the majority, at least 40% of companies will reduce the amount of employees they have. Then it says that AI is automating a lot of tech roles in Oracle, Dropbox. There are new opportunities also within the data, fintech, and AI specialist fields. So if you switch your career and reskill to what the growing areas in your industry, that makes sense. Now, we've got all these statistics about the high number of layoffs. So if I just zoom out a little bit here, these are like the top 20 highest layoffs. Of course, there's so many statistics out there, but based on the analysis that I could source, I can see some of the highest layoffs were at UPS, 20,000, Nissan, the car manufacturer, 20,000, Nestle, food manufacturer, 16,000, Microsoft, 15,000, Panasonic, 10,000. So you've got some tech companies, hardware companies, Chevron, car company, of course, 9,000, Nordisk, BP, of course, in the commodities industry, 7,000, Intel, tech again, 5,000, Porsche, car manufacturer, Meta, tech industry, Starbucks, retail sector. You can see how broad it is. There is a broad pattern, but let's look at what is some of the kind of niche issues here. What are the broad trends, right? So let's go through some of the broad trends here. But before we do that, I just want to go through this in a bit of detail, right? So what we see here, what are the broad patterns? AI and automation in tech industry is becoming more common, and that's taking away some of the jobs on top of outsourcing. Overall, there's a lot of cost pressure from inflation, from interest rates that are reducing investments, reducing consumer demand. There's lots of uncertainty also due to tariffs and things like that. That means that companies might not be willing to invest and grow globally. Then you've got sector pivots, right? You've got in the car manufacturing companies, as you can see here with Nissan and Porsche and Chevron, right? And a few other examples there, even in some of the commodities industries, BP and Exxon, things like that. There's lots of pivots, right? Because people are moving from standard gas-powered cars to EVs, electronic vehicles, right? So you've got renewables, you've got automation in the pharma industry too. You've got Johns Hopkins, which is like a company within the medical field. You probably remember them from around 2020. They became quite popular there. So some of those jobs are going because of automation within the pharmaceutical industry and big pharma too. So there's tech is essentially changing within its own industry, but it's changing how other industries work, and also the high demand of climate friendly technology like electronic vehicles are also seeing some of the demands. But let's go through each of these in a bit of detail before I move on to some of those factors in more detail. So for the tech industry, like I say, automation, AI is reducing redundant roles. I did a recent video about IBM, who removed like 90% of their HR department by automating a lot of that. There's lots of overhiring during the pandemic around 2022. There was lots of overhiring during the lockdown period. So efficiency, restructuring things for more efficient operations and reducing headcount is something that they did. Then, like I say, for cars, we've got Nissan, Porsche, and some other companies there. Essentially, there's higher interest rates. People are less willing to buy cars. More and more locations are focused on public transport, like in the UK, in London. There's more and more higher costs if you are driving a car that isn't an electronic vehicle. And then also on top of that, you have a lot of the supply chain that's shifting towards more automation, less manual labor needed for that. When it comes to logistics companies like UPS, there's a slowdown of the growth of e-commerce after the lockdown period. There is some automation in the delivery, and also there is more cost controls because there's more union contracts that have been like change, so less salary increases there. Then when you look at the energy sector like Chevron and BP, what you're seeing here is due to the whole net carbon zero decarbonization type of pivot, people moving from oil and gas to more price efficiency type of targets and things like that, and environmentally friendly processes. With pharma and biotech, you've got Novo Nordisk, you've got John Hopkins there, and they've had a lot of growth due to some of the weight loss drugs. You probably heard of Ozempic and things like that. And then automation and supply optimization has changed. And then you've got consumer goods, things like Nestle, right? There's more margin pressure from inflation and slowing sales due to mature markets like in the West, and also reorganization and cutting duplication across their brands and regions. So lots of interesting trends there. Essentially, people are spending less in the economy, companies are less willing to invest, and also they're trying to make things more efficient. So I think you could summarize these layoffs as simply efficiency, cutting costs, essentially cutting costs at a time where demand isn't particularly high. So there you go. So we're going to dive deep into this. The overall trends are, and you'll probably see it in your industry, let me know in the comments, is there greater focus on efficiency? Is the era of endless hiring over? The companies are cutting jobs due to protect their profits and tighten operations. Microsoft, Salesforce, sales teams, things like that, trying to make things more efficient. AI and automation, smarter tech. Workday is like a system that HR can use to, log your days off from work, to log any type of HR issue, and that system has really improved in recent years, and you need less and less HR if you're going to have more of that. Then we've got things like restructuring, right? So restructuring, they're reducing bureaucracy, they're merging units to cut dead weight and useless employees faster. A lot of demand shifts. Like I say, there is a decrease in sales. People don't want to talk about how less and less people are spending money. I don't know if there's a media blackout on that, but the media will cover that less people are going to restaurants, but they won't cover that consumer demand must have dropped drastically, right? For everything, people are focused on their survival needs, right? They might get obviously they're basically food, water, shelter, and clothing. Maybe do a low cost of living type of vacation, staycation, go on a low cost holiday. They might buy a few goods that they want, but a lot less than before. They might buy like a one video game console and a few games, but they're not going to be buying, dozens of games, multiple video consoles. They're not going to be spending all this money on luxury goods and expensive clothing and things like that. People are really being careful how they spend their money these days. Next up, you have demand shifts, where it talks about, like I say, when sales drop, margins are squeezed, and brands are swinging the axe to stay alive and reset the strategy, right? So Starbucks, of course, you've probably seen in the news, they've had a lot of job cuts, closing locations. There's even been some pizza restaurants, you've probably heard in the UK, Pizza Hut and other pizza companies in America, where they're shutting down locations. Nike, again, less and less people want to pay for overpriced clothing that is average quality in many cases. So you're going to have a lot of these brands really struggling to survive because there's less people spending money in the economy. Then you've got a lot of macro shifts, right? You've got tariffs, you've got funding cuts, you've got failed mergers, blindsiding companies and forcing layoffs overnight. So again, these companies that tend to export a lot, like car manufacturers moving cars from one country to the other, there's more and more pressure there in terms of tariffs. There's lower demand. People have less money, so they have to get, the most affordable car they can get rather than the best one. And then you have performance culls. Meta and Google, I covered in a recent video, are having higher and higher performance standards and reducing any employees they consider to be, average or mediocre. And they're redefining how they're reviewing performance. So more employees are being labeled as average or below average employees. They're easier to fire. Now we got the layoff by industries, right? So before I move on to that, we are in the Black Friday period. We do have a 20% discount for the first 5 clients that are interested in actually getting started with improving their career, because the way it works, and this will be the lowest price you will get my coaching for. So 20% discount, like I say, prices are going up for my coaching going into next year. The economy is getting worse, as we can see through this, which I'm going to go through in more detail. But if you're interested in increasing your power, pay, and freedom, and you don't want to be stuck in, right, the never-ending financial insecurity that we see a lot of people in their career, over a 12-week coaching program, I'll teach you how to outsmart office politics, increase your salary through a job search, take control of your career, get promoted depending on your circumstances. I tailor-make the coaching to meet your needs. After over 100,000 jobs have been gone, the opportunity is always there still to shift your skills, to shift to what is the next wave, the next trend in hiring. I've worked for over 10 years at Goldman, Morgan Stanley, many other companies, and I'll show you how to protect your income going into 2026. So link in description to get started with me. 20% discount for first 5 clients, and I look forward to working with you. Let's move back to this. So layoff by industry, we've got finance, right? Every industry is feeling it. They're having different reasons why they're struggling right now, and here's where the 2025 jobs cuts are hitting hardest. We're going to start with finance. So within the finance industry, you see Morgan Stanley have cut over 1,600 to 2,400 jobs. Then PwC, which is like the big 4 accounting firms, and BlackRock have had some cuts too, and Bridgewater. So they're reducing essentially a lot of these high-paying jobs. Big banks and consultancies are cutting a lot of their employees because deal flow and their transaction flow is reducing. There's more automation that's replacing a lot of the junior analysts. Then you've got fintech, a company like Block or Stripe. And what's happening here, a lot of the easy money era is kind of over. Fintech firms, they were once chasing hyper growth, but now they're focused on survival, trimming their teams to stay alive and to maintain that demand level. And also many people who went into e-commerce, some of them it's working out with drop shipping and things like that, but other people it's not. So there's a bit of a lower demand for some of these fintech high speed payment systems like Stripe and things like that. So they're having a bit of a decrease in demand. Now, also when it comes to tech, right, software platforms, right? So we've covered, like I say in a recent video, Microsoft cutting 15,000 jobs, Meta, Workday, and then we've got Salesforce and other companies. They're done playing nice, as I covered in an earlier article you might have seen on my channel. Thousands of job cuts. They're rebuilding around AI, leaner organization, more ruthless efficiency, more focus on essentially making more money and reducing their costs and giving more work to less employees, because they're having layoffs and saying, oh, we're going to lay off 20% of the department, but that extra work that they couldn't do because obviously they've been fired, you're going to have to pick up on it. And this is the stress I see a lot of the time in finance and tech. Moving on, cybersecurity, right? So cybersecurity, CrowdStrike, even hot sectors that are quite popular. You might have seen the trend in the last few years of people getting certifications in cybersecurity and going into that. And yes, it can be a successful career, but even those areas are seeing, you know, tightening belts after some incidents and market corrections. There may have been overhiring there. Then you've got electronics and devices, Panasonic. I never see Panasonic electronics in recent years. You know, I remember they having televisions when I was growing up with Panasonic, but I don't really see it as much these days. You've got Sonos, which I believe is like the audio. They sell like audio products like speakers and things like that. And then Peloton, the exercise bike, they've also had layoffs there, right? So hardware sales are cooling fast because less people have less disposable income. They're focused on survival. They're dealing with layoffs too. So automation is quietly taking over and less people are buying some of these products. Now, semiconductor, right? Intel has 5,000 in the US layoffs, microchip technology. Then you've got another case, right, of energy sector and the associated cars, things like Chevron, BP, Exxon. They're reinventing, they're focusing on the renewable energy era, cutting thousands of jobs to have clean energy. What's funny is the system went in direction of ESG and climate friendly practices, and then Trump got elected. People weren't so into, you know, ESG, DEI, CSR, all these type of politically correct initiatives, the woke agenda, stop oil, those type of kind of climate protests and things seem to slow down. I wonder what's going to happen. I know there'll be more renewable energy, efficient vehicles, electric vehicles, but I have a feeling that some of these oil and gas companies are going to switch back to doing more oil and gas production and less, or to a lesser degree, some of these electric vehicles, because people are kind of fed up with a lot of this political correctness and also this ridiculous control over everything they do in their life. And then we've got pharma and biotech. Of course, pharma, they made a killing for that fake health situation that occurred in 2020. We can't even discuss. So the whole point is they made tons of money. I'm sure they have more and more layoffs coming up, because unless they stage another fake health event, they won't be able to make as much money as they did in the last few years. A lot of these biotech firms, they're maturing faster. They have record profits, automating production and tightening R&D budgets. And I find it interesting how more and more people are seeing through a lot of the lies. So more people don't want to be materialistic consumers. They're seeing the lies through some of the big pharma industries. They're focused more on their health, so they don't end up with health issues that depend on pharmaceuticals for the rest of their life. So there are more and more people who are kind of seeing through a lot of the lies. But if we go through companies specifically, right? So we've got Microsoft, 15K layoffs, Morgan Stanley, about 2K layoffs, Meta, 3K, PwC, which is like the accounting firm, 1,500 layoffs, Nestle, 16,000 layoffs over the next 2 years, including this year. So it's quite high when you look at it in a bit of detail. Let's go through some of these and dive a bit deeper. With Microsoft, you see they're purging underperformers. They made several rounds of cuts this year. In January, they cut a lot of jobs earlier this year based on employee performance. And workers were told, this is what's crazy, some staffs were laid off from this billion dollar finance tech firm. And what they've done is they've essentially laid off employees without giving them a severance package, no layoff package, no money to leave the company. They just said, okay, we're not going to pay you any money to leave the company. You just have to leave, and there's no benefits coming along with it. Typically, if you get a layoff from a major billion-dollar firm, finance, tech, whatever it would be, especially something like a Microsoft, they would give you some money. They'd say, okay, here's 2 months pay, 3 months pay, and you leave the company. But now they're saying for some of these people, they're not. And also in May, Microsoft announced 6,000 layoffs. So they did these massive layoffs within the first half of the year mainly. And another round of layoffs occurred around July, about 9,000 employees, so about 4% of its workforce, which is over 200,000 people. So it really is crazy when you look at this and you put it all together and you're like, okay, cool, well, they're firing people in gaming. You might have seen their Xbox department had some job cuts, sales, corporate divisions, they're all being reshaped because, again, they're focusing more on AI. Then Morgan Stanley is cutting about 2,000 employees, cutting about 3% of their workforce. They're driven by operational efficiency, shifting their business priorities, focusing more on harsher performance reviews to kick people out by saying they're low performers. And then also it's mentioned their financial advisors are doing well in their department, but some of the support tasks, the administrative teams in wealth management might be impacted. Many of the support back office staff is being outsourced to India and places like that. So there are job cuts there. And the management is actually saying, okay, we just want things to be more efficient rather than get rid of lots of people. Then you've got Meta cutting their workforce by about 5%. The CEO, Mark Zuckerberg, Zuck the Cuck, he said that staff would be raising the bar of performance, which is essentially deeming more and more employees to be low performers so they can easily fire them. The cuts began in February and hitting teams across Facebook, their VR teams, their reality labs team, their logistics teams. In April, they had laid off a lot of their VR virtual reality team. And then previously, they cut over 20,000 employees since 2022. So in the last few years, they've cut about 25,000 jobs. I just want to have a brief side note there. They mentioned a lot of job cuts in their VR department, in their virtual reality department. And this is what I mean about consumer demand shifting or not getting into some of these psyops and agendas, right? Many people think that, virtual reality is a bit weird, or they don't want to have something glued to their head, and be stuck in a false reality. They want to live their life in real world, even if they play a video game every now and again or research things. Many people don't want to walk around with glasses that might have record things, record others, lots of privacy concerns there. Seems a bit weird. People want their freedom and they want some use of tech, but they're not going to spend, hundreds of dollars, thousands of dollars buying all this virtual reality technology just because they're told to by the establishment, particularly when people are becoming more and more questioning of big tech, what's the agenda there, taking everyone's jobs, getting them to spend money on tech they don't really need, things like that. Then we've got PwC. Now, PwC is cutting about 15,000 jobs, and what's going on? That's about 2% of their workforce. They're talking about how they have a lot of employees who are job hugging, which is kind of funny. Job hugging is a phrase online where people are sticking to a job that they don't like just because they don't have any other opportunities. So many people are not leaving the company. Typically, if you have a company, there'll be a certain percentage of employees that will leave after some time because they're not getting promoted, they're not getting pay rises, they just want more career progression. So they'll move to another job at another company. But many employees here, they just don't have opportunities elsewhere. So they're just sticking around, maybe not doing much work, quiet quitting, doing the bare minimum, and PwC is kind of like, oh well, we're underpaying our employees, they're not leaving, so we have to just fire them now because they're sticking around for too long. They're not taking the hint that we're not going to pay them well or give them bigger bonuses. So they end up sticking around because they've got no other alternative. So it's saying they're overstaffed, they're bloated, some of their audit and tax teams are going to be suffering some of these cuts, and they have too few employees leaving voluntarily, as I said, right? So the layoffs began around May, and they're just saying it's just something they're going to have to do to keep pushing forward with their company. Next and last, we've got Nestle, right? Nestle is about 16K layoffs over the next 2 years. The cuts include 12,000 white collar jobs, 4,000 blue collar jobs in manufacturing. So people in the office, people in the factories losing their job. And the thing is, it's about 6% of their workforce. And the CEO of Nestle said it's about making faster changes and focusing on higher returns. Because again, they just focus on what's going to take care of their employees. Not their employees, actually. They want to get rid of their employees. They want to look out for their investors and having higher profits with more work done by fewer employees, so they have lower costs and the same or more output. So I think what's hiding behind this, what people don't want to talk about, is really a lot of a dysfunctional economy. A dysfunctional economy, you can't blame it all on AI. There's a bit of AI, there's a bit of outsourcing jobs. There's also people who are spending a lot less money. People are cautious about spending money. Companies are cautious about spending money. So you just have a slowing economy without people officially saying things are a recession. The numbers are fake. The layoff statistics typically can have some fake elements to it, and inflation's being faked in terms of what the real numbers are. It's much higher than you're told they are. Government's lying to you, the mainstream media, economy lying to you based on false statistics and false government reports. And that's why you have to come here for the honest takes. So I think it's going to be rocky the next few years. But if you are dealing with a layoff and you are struggling with this reality, there is a Black Friday discount on, 20% discount for the first 5 clients. This is how you can get started. In the next 5 clients who sign up will get that 20% discount. But the way it works is a 12-week coaching program to help you take control of your career, to build more power, pay, and freedom, increase your leverage at work, develop your skills, navigate the office politics. I have course videos, I have one-to-one sessions every week, and we go through everything in detail to make sure you're maximizing your career to make the most money in what is a very dysfunctional economy. Because you see this now, and this is 2025, and this with them downplaying everything, making sure the economy doesn't sound as bad as it really is. There's some recent news I might cover where in America, they don't want to share the employment statistics for October. The government's refusing to release the October employment statistics because it probably looks very bad, and the economy's in very bad shape. But the society and the economy and the mainstream media isn't willing to publicly acknowledge that. They just say, oh, things are a bit tough, there's a cost of living crisis. They're not talking about all the job cuts like I am here, right? They're not talking about how difficult that is if that lasts over the long term and people can't find jobs for a year or 2 and things like that. So I'm really here to help you, and that's why I have a career coaching program where I share a lot of the uncomfortable truths and find real solutions. And it's all about being solution orientated when you are in a very difficult economy like this. Link in description to speak with me directly, 2 recommended videos on your screen right now, and I'll see you next time.